I'm super excited to have Paul Garofoli on board today. We'll be talking about the carrier and a very new, exciting product that has been launched. And Paul, you actually purchased one for yourself today, didn't you?
I did. Let's get that out there. There it is.
That's
The new,
amazing.
the new UCI from the standard. Yeah. So I was real eager to do it. I didn't help design the product, but obviously in terms of the rollout and the promotion. And then I said, man, I want to get one of these, and I managed to get in and get the first one issued. But we're very optimistic that it will be the first of many for many different policyholders across the country.
Absolutely. I hope so too. But it's just such a great example of leading by example. I mean, having that faith and that trust to have a policy in your own hands is just really speaks to the testament of the standard, right?
Absolutely. And
So
I think for anybody watching, I think that's important to have confidence in the companies you work with, and when and where it makes sense for you as an advisor, you know, um, uh, walk the walk instead of talking the talk. And having that, owning the product in particular gives you some, I think, insight from what the consumer is doing. And of course, with the great resources from Annuities Genius, the independent advisor, obviously I needed to buy one from the standard, but the independent advisor, you have a whole menu of products and options that you can compare and contrast. And you were showing me, Amy, some of the additional resources you have. It's just amazing, the tools at the advisor's disposal available through Annuities Genius.
thank you. That's what we try to do is support them in the best way, make them more efficient, more transparent. And it's just such a wonderful to be able to do this, to have all of these products out there to increase that trust and transparency is just, it's really neat to be able to be a part of that. So what I've done is I've pulled up only the standards products. I want to talk a little bit about you guys. So you are an A-rated carrier, highly credited, and been around since 1906. So you have that age, that experience, and that track record too, which is just amazing.
Yeah, second oldest insurance company based on the West Coast. So we go back a long way. And our founder was, specifically wanted to establish a company that could provide protection. I like to say that originally based in Portland, Oregon, we were insuring lumberjacks back in the day. So
Well, I'm from Oregon originally, so I love it.
Yeah, so we've got that, got that legacy. And then, the company itself, very diversified in terms of businesses. And I think that's more and more important for the advisor to understand, because we certainly have ratings to evaluate people, but, I think that you have to do sometimes a deeper dive into the businesses that the company is involved in, particularly, the investments that they're engaged in. We have a pretty diversified list of investments, but the businesses are diversified. We have a great individual disability division, an employee benefits division, a retirement plans division, which is 401ks and those kinds of things. And then the individual annuities, in essence, individual retirement division, the division that I work for. So that diversity and depth and breadth of product just beyond the annuity proposition, I think makes the company particularly strong and appealing.
Absolutely. And then one thing that was particularly two things kind of jumped out to me about your products is, first of all, that line that you have, the multi-choice annuity, has so many different variations and choices that it can be really tailored to any prospect, or almost any. I mean, obviously you have to really find what they need and make sure it fits their needs. But I was just amazed at the options and the range of choices in that product line.
Yeah, well, we hope a lot of prospects want safety guarantees and very competitive interest rates. So we think
they want it all, right?
The appeal is broad, but the MCA product, multi-choice annuity product. Now we're looking at the focus growth annuity, which is a very competitive product series in and of itself, but it's basically a one size fits all. Mm-hmm. The MCA product allows the advisor, in conjunction and consultation with the policyholder or prospect, to dial up or to dial down liquidity. So for example, you can get our most competitive rate, which is a top tier rate, basically with no liquidity, and in essence being the insurance company alternative to a bank CD. Or on the other extreme, Amy, you could dial in tons of liquidity to the point where you could have full return of premium at any time as a version. What's the exchange? Well, you give up basis points for liquidity. So the highest rate, no liquidity, lower rate, but lots of liquidity and break points in between. And of course, your platform is great for being able to compare not only within a product set of one company, but also multiple companies as well, as your audience knows.
Exactly. Yes. Now, the other thing that I noticed as well is that your SPIA has a low contribution amount, which is nice for agents to know. It has a low minimum, lower than you'll find in some other SPIAs, which is just a nice little knowledge to have in the back of your mind as an agent as well, knowing about these products and getting this in-depth knowledge, especially with an insider like Paul, is just amazing because you have those little knowledge, you have that knowledge in your brain to understand, okay,
Yeah.
well, my client needs this, I have a product ready.
Yeah, and beyond just the product, one of the things that the standard is engaged in is we do a robust amount of what we call restricted SPIA business, or so-called Medicaid compliant single premium immediate annuity business. And that's one of the reasons we have a lower entry point, because sometimes the case is to help people qualify for assistance when and where they need it, requires that they need to protect a modest amount, modest maybe from our perspective, but all they have from their perspective. And more importantly, with the right approach and the right team, including an elder care attorney, you have the ability to perhaps help people qualify for assistance when and where they need it.
Excellent. Well, I've just clicked through the platform a little bit. I know most of our user base is very, very familiar. For anyone listening who is not familiar, we are a point of sale platform that helps you with product validation and selection. We are proven to increase production for agents by 50%. And most importantly, is we document the entire process. As you select the products and go through that sales, we document it, save those records with the click of a button, and ensure that you don't have to do any extra notes or records, anything at all. So I just wanted to throw that out there and let you know about the platform. I will let Paul take it away and inform us on this brand new product.
Okay, fantastic. All right, so let's just see here. I'm going to share my screen. I think there it is. All right, fantastic. And thank you, everybody, for helping us get this going. So just 1 second. All right, and we'll go. And off we go. So what we're going to do, and ultimately this will reside on the Annuities Genius platform. It's quite frankly a little bit of a departure for the standard in terms of accumulation focused index annuity. And everybody's got the latest and greatest, but we build from a platform of consumer centric features. And I think your audience will come to learn that this is the choice, or this is the case in the enhanced choice index annuity. But before we do that, I wanted to highlight some of the things about our overall portfolio. Amy was so kind enough to point out a few of those things, but there are a few things here that the standard does uniquely that can be discovered using your platform, Amy. But sometimes you need to know these things in advance too. So for example, your platform at Annuities Genius, you can have age ranges. One of the things that we do very well is we can do older age, both MIGAs and FIAs. You can discover that on Annuities Genius. Another thing that maybe is a little bit of a hidden feature is the maturity age on our products, which is 115. And for a reminder, annuities have an expiration date. A lot of people criticize them for being long, but sometimes they're not long enough, because most annuities will expire at age 90, 95, 100. Well, we used to think that that was adequate, but it's not. And people are living past 100. And what that means, the practical implications, is that the annuity is over. It's a forced surrender. In our case, our forced surrender or maturity date is 115. So in most circumstances, your clients won't outlive their annuity with the standard. Another feature, you can discover riders and how they apply and the distinctions between those riders on Annuities Genius. And we have 100% liquidity for nursing home. Ownership designations, again, another thing that you can discover and vet on Annuities Genius, but we have all the different designations, joint annuitant, joint owner. These are distinctions that matter in some cases, particularly with replacements or trying to serve a unique client need. So we have that ability. A little bit of a hidden feature is our contracts are owner driven, which means typically the benefits of the contract are based on what happens to the owner. In this case, death benefit paid on death of the owner. But we also have a feature, if the annuitant is different, the owner can get a full payout of the contract without penalty. So that's really super cool. No chargeback for deaths on anybody issued 85 or younger. I think that's important. And then another feature that you can discover on Annuities Genius is our ability to annuitize at any time. So from day one, you can actually liquidate the contract, full contract value, no surrender, even with the partial interest rate credit if it's mid-year, and get a payout over time. What I think that applies to is, number one, the agents that do bucket planning, ladder planning. This is a great way to be able to do that. And then just as an overall objection buster, Amy, for people, what if I need my money? Well, you can get it out of the standard very easily by annuitizing for as little as 5 years. Trail commission options in all our products, and then very generous guaranteed minimum accumulation benefits, meaning there is always a gain paid out on our index products, even if there's no underlying performance in the indexes that provide the accumulation potential. So all good there. So thank you for that platform, Amy, and Annuities Genius. Now I want to talk to you about the Enhanced Choice Index. More choices, more upside potential, more guarantees, more choice. And in particular, indexes beyond just the S&P 500. You know, our legacy product that you have on your platform, Amy, the Index Select Annuity, S&P 500 only. Very nice product, but that's it, S&P 500. You're going to find more choices there. And of course, on the platform, you can vet ratings, and you mentioned that, and we are very proud of our ratings, and we have that. So let's get to the heart of the matter. We're just going to go right to it and talk about some of the practical implications. But the big change is beyond just the S&P 500. We're going to have 3 additional so-called hybrid or volatility controlled indexes. This is a first for the standard. And speaking of first, this will be the first index product generally available that has a S&P 500 based environmental, social, and governance index, ESG. And we'll talk about that in a little bit. The participation or the index crediting, participation rate only uncapped indexing with an enhanced participation rate as well. So let's get right to it. Let's talk about the upside strategies in this product. And your audience is really aware. And of course, your platform is a perfect comparison tool, an analysis tool of the underlying indexes. You showed me prior to the meeting, I mean, it's like an alphabet soup of indexing that you have that you can compare and back test. So we have that. So we know the S&P 500. You should know the S&P 500. If you're on this call, you're a vet, you know what that is. We have it in this product. But we also have a relatively new index. About 11 carriers have this index in their product mix, and that is the S&P Mark V. And what's appealing about that is that it includes a commodities component, primarily gold. And so silver and gold, you have that in the Mark V, and provides another measure of diversification, but still within the S&P Dow Jones indices family. And so you see that with all these hybrid indexes, it is important to distinguish the S&P 500 pure, as I call it, with these hybrid, that you have different components that are managed to a strategy and managed to a volatility target for stability in the overall performance of the index, and not only the pricing of that index for the carrier perspective so that we can offer consistency in terms of participation. And you'll show just how consistent we can be on that. But this will balance between the S&P 500, the commodity component, and a fixed component as well. Then we have the daily risk. Again, it's a derivation of the S&P 500, and this index will balance itself between the S&P 500 and cash on a daily basis, again, providing stability and predictability. You can backtest any of these strategies on the Annuities Genius platform. And now, something unique, something completely different. Well, maybe not that much different because it's still in the Dow Jones S&P indices family, and that is an ESG. And again, I'm not looking to convert anybody progressive, conservative, right wing, left wing. You know what? Let's all make some money for our clients. And that's ultimately the appeal of this particular index. And I'm going to spend a little bit more time on this, Amy, with your permission, because it is relatively new. But ultimately, first of all, it is a vol control index. So there's that measure of stability and predictability in it. But it's going to focus on those components, those participants in the S&P 500 that have relatively high environmental, social, and governance types of scores to be part of that index. So ultimately, I think this is a great chart to look at because we're taking the S&P 500 as a whole and then excluding certain types of industries, fossil fuels, weapons, things like that. Now, I'm beginning to think, Amy, we may need the SII type of strategy, which is the socially irresponsible index. And in that index, we'll have guns and alcohol and all those kinds of things. Well, we'll see how that goes for now. But right now we have the ESG. And one of the things to think about is that there's a certain audience of clients that like to think of that they're contributing in some way to being socially and environmentally responsible. So that's what we want to appeal to. But at the end of the day, and you're going to see this, it actually performs pretty well. So we take these measurements, these scores of the different industries, and then ultimately we're looking at about 75% of the participants in the S&P 500 that are in this. So, in the S&P 500, you got 500, and there's actually a few more in there, a little trivia fact. In the ESG, Environmental, Social, and Governance Index, 310 participants. But this is where your back testing will affirm this on Annuities Genius, and that is, look at the annualized returns. Socially responsible investing actually pays you more. You could be a greedy capitalist and still be environmentally sound. How's that? The deviation, the predictability, all pretty strong. And that's really the point, is that when you think about it, when we eliminate certain industries, we have the high tech, we have some of the greener types of industries that are up and coming and performing quite well. So, ultimately you get a little bit more favorable disposition towards the environment, a little bit more favorable disposition towards the social world, and then in terms of corporate governance, a little bit more responsibility and focus there. So ultimately, the whole idea is you can do good and still do well financially there. Now let's talk about how the product is constructed. And as I mentioned, it's participation rate only. There is no cap strategy. There is no spread strategy. Participation rate only, with a wrinkle, which is you could have basic participation or you can have enhanced. Again, enhanced choice index, enhanced choice participation. You can purchase for a fee an additional higher participation rate for each of the strategies. And I talked to folks about the predominance of fees in our industry. We pay a fee. Many people willing to pay a fee for an income rider. Many people will pay a fee for a death benefit. Many people will pay a hidden fee, like on the MCA, you give up basis points in terms of the crediting rate for more liquidity. So think of it in that way. So here, we're going to give you more participation on these underlying indexes for a fee. And there is a nice little thing that we do, a couple little things that we do. And there's a handful of products in the marketplace that are these so-called buy-up products. One of the things that we do uniquely is that we don't deduct the fee until the end of the policy year. So in that first year, you're not going to see a deduction up front. Some of these products that offer this buy-up option will deduct the fee outright. So with us, if you put 100,000 in, 100,000 is getting indexed. The fee will be deducted based on that original 100,000, and then you get the resulting gain. So we think that is very consumer friendly, deducting the fee. So if the client calls and goes, well, how much do I have in my account? You have 100,000, because the impact of the fee has not been deducted yet. So we have that. So what do you get? And again, you can compare and contrast this, but remember, with the enhanced choice index annuity, you get a basic participation rate or an enhanced participation rate. For the audience, you can mix and match. So you can have a strategy with a basic participation rate. You can have a strategy with an enhanced participation rate, and vice versa. At renewal, you can reallocate, and any combination of these things. Now, the product comes in 5, 7, and 10-year variations. For the sake of time, let's just focus on the 7-year enhanced choice index 7. So we'll look at the different strategies here. So remember the 4 indexes: S&P 500, the Mark 5, the daily risk, and then the ESG index. The S&P 500 pure, the basic participation rate is 31. But if you were willing to pay the fee, you get a quite astounding participation rate of 49% on the S&P 500 itself. On the other 3 remaining indexes, the Mark 5, the S&P daily risk, and the ESG index, the participation rate is 100. You get 100, you get the whole pie there of that, those vol control indexes. But if you buy up, you get 155%. And I think that's important. And in the design, you know, if you are going to commit some of your capital to the enhancing the potential upside, what I would want to see, and I am a policyholder, by the way, what I would want to see is a significant participation rate enhancement. And I think everybody can agree that you see those participation rate enhancements. But again, we're consumer centric at the Standard, and we wanted to deliver even more value. So those indexes, the vol control, the risk control, the hybrid indexes, those participation rates that I showed you, whether it's the basic participation or the enhanced, are all guaranteed for the 5 and 7-year term products. Now, the 10-year product, because of design, those participation rates will change and vary over time. We have a very good renewal history. But for those that want even more stability, the 5 and 7-year versions of the product have participation rate guarantees of the duration of the contract: the 5-year on all the vol control indexes, the 7-year participation rate, that 155% participation rate on the enhancement, guaranteed, Amy, for the length of the contract. Pretty powerful.
That's pretty powerful.
We're coming to the round in the bend here in terms of some other things that you need to know. And again, we're maybe taking a little bit of your thunder, Amy, at Annuities Genius, but we have some numerical examples that are available here in terms of back testing. Well, what do these different strategies do? And you can have that full resource available on the Annuities Genius platform. That's why we're so excited about our partnership, because I think some of these qualities can be discovered, compared and contrasted, and we hope to our advantage when and where it makes sense for your clients. But if you look at the base participation rate, what does the enhancement buy you? It buys you more upside, more potential, 5-year look back, 10-year look back. And I might add that these rates on the enhancement are net of the fee. So this is the impact on the original deposit. So it's not like, okay, I got 7.34, but I got to account for the fee. The fee is already accounted for. That's the net realized appreciation on that. The Mark V. Now we see some of the advantages of that diversification. Great 5-year and great, even better, or great 10-year participation and performance. The daily risk, again, comparing here. And then finally, the ESG. And this is where I go, you can do well by doing good. You can see the last 5 years by focusing on those environmental and social and governance focused industries, they actually perform pretty well.
Mm-hmm.
So you have that advantage as well. Full disclosure, what did I do? I'm in the enhanced participation rate on my product, and I did the ESG 50%, and I did the Mark V 50% there. So keep that in mind. A couple additional features that I think are important. You'll discover most of these in the product outlines that you find on Annuities Genius, but there's a couple of things that you might not, because it's a little bit of a hidden benefit. But you have 10% annual withdrawals after the first year, pretty typical. Remember that anytime annuitization feature is also available. First year RMDs, okay, you discover these things here. Terminal illness, nursing home confinement, for the most part, California, it's a little bit more liberalized. Death benefits paid, but we give a partial index or interest credit. So what that means is you're mid-year on the policy anniversary and you take a withdrawal, or not take a withdrawal, but you have one of these events: death, nursing home, terminal illness, annuitization even. We will credit you up to that point where that benefit is triggered. Typically, Amy, as you know, when you're doing mid-year liquidity, it typically goes back to the last anniversary. What was the value of your contract on your last anniversary? It's like, hey, I'm up 7%. Shouldn't I get credit for that? Nope. We go back to the last anniversary. At the standard, we don't. You get a partial credit on that. You can illustrate in most states. There are a few states, because some of these indexes, particularly the Mark V and especially the ESG, don't go back 10 years. They're not illustratable, but that's why using either our numerical examples that we have on our website or the back testing available on Annuities Genius can give you and the client some insight in the overall performance, though you might not be able to generate, for example, in Iowa, an actual illustration because of their different requirements on that. Commissions, we pay decent commissions on this. I'm talking about street commissions available at large. One of the things that I want to point out is that we have great trail options. So take a look at that Enhanced Choice Index 7, option C. We pay a 1% trail, and that trail goes for not only the duration of the contract, but for as long as the contract's on the books. You know, in some cases, people don't surrender their contract or 1035 it at the end of the initial CDSC period. We will continue to pay the trail to the advisor. I think that's important to know as well. So let's sum up for your audience, Amy. We have fee and no fee choices. The fee is 150 basis points or 1.5%. We have multiple index strategies. A first for the standard. We only had S&P 500 alone. Now we've quadrupled the amount of choices available for indexing using the ball control indexes. All those indexes are uncapped. A new, only at the standard for right now, that S&P 500 version of the environmental, social, and governance index. The participation rates on the 5 and 7 year, guaranteed for the length of the contract, whether it's the basic rate or enhanced. And again, some people ask this, if you reallocate on anniversary, the participation rates continue to be guaranteed. The rates in the contract are guaranteed for the term, even if you move and allocate and reallocate money among the different index allocations. And then again, consumer centric, that's what the standard is all about. Hopefully your audience will take that away from this presentation. We have generous guaranteed minimum accumulation benefits. And the guaranteed minimum accumulation on the enhanced choice is a lucrative, unbelievable 0. We guarantee 0. But to pardon the cliche, Amy, 0 is a hero in this case. Because what we mean by that is no matter what, your initial premium outlay at the end of the term is guaranteed to earn 0. What, you're looking confused. I'm confused. What does that mean? What that means is, remember, we have a fee-based product. If you choose it, the enhanced choice fee, 150 basis points. So let's take that extreme example where you go 7 years, you go 5 years, you go 10 years, you pay the fee, and despite our best intentions, there is no index performance. Secular bear market, unbelievable black swan events happening each and every year for the foreseeable future. You've paid the fee, and now you are significantly underwater from what you initially paid. Well, that big fat 0 now turns into the hero because it will restore the value of your initial premium outlay to what you gave us at the beginning of the term. So no matter what, even if you pay the fee and there is no performance, the guaranteed minimum accumulation benefit will take you back to where you were, in essence, a guaranteed return of premium if there is no performance. Now, with the tools that you have, we expect that there will be performance, but we can't guarantee it. So now you have a guarantee of full protection of principal. That's what I love about this product. In terms of marketing support, just a couple other things to talk about briefly. Obviously, the Annuities Genius gives you great kinds of things. And then if you go to our platform, we have a whole product support, in essence, a microsite on the product that gives you marketing materials, the brochures, and I think importantly, those numerical examples, as well as illustration capability too. And then information on the underlying indexes. Now, on the platform, Annuities Genius, you can have the back testing of those strategies in and of themselves. So what a great combination, a great partnership to have in doing that there. My sales team, you can get us, get me, and then that's the standard.
Excellent. Thank you so much for that wonderful presentation, Paul. It was just incredible to learn so much about your products and those wonderful niches that they fill. The thing that really stood out to me too is that maximum contribution age, when your age limits are really amazing because there's not a whole lot of carriers that do that. Now, if you do have a moment, I think we have a couple questions in the chat. If we can open it up for a small questions and answer sessions.
Yeah, so let's, I'm able to see that right now. I think we talked about that. So Emil was asking about the guaranteed participation rates. I think we outlined that as well. Just as a refresher, the S&P 500 is guaranteed each and every year, so it's renewal. But on the index, the hybrid indexes, the 5 and 7 year terms are guaranteed for the term of the contract. So keep that in mind as well. So we had that. Okay, this is like layups here. And again, your platform does this as well, but we have how do the fee and no fee compare? And we actually showed those, and those are available in a numerical example. So we're good there. We're hitting there. What's the surplus ratio? It's really good. It's really good. And we have on our website all the financial data that we talked about. And I would also say that that's one of the great resources, Amy. In fact, maybe why don't you talk about how your platform helps agents and advisors evaluate the financials of companies?
Yeah, absolutely. So let me, and also I can jump into the shared screen as well and just demonstrate the Annuities Genius app one more time while we're finishing up here. So first of all, let me jump into the FIA products as well. So I wanted to speak to the details. Now, as you can see, we automatically filter out by state, by fund type, premium amount, age. So you know automatically that the products you're pulling up are already fitting your prospect. Now, underneath that details tab, you can actually find all of the different index allocation options. We have those state to state variations just a click away right at a glance. And what else is really cool is we also have that brochure linked. So if you need more product info and you want to do that deep dive, this is also downloadable, printable. You can attach it to an email and send it over to your prospect. Everything that you need for diving deep into these products is going to be just one click away.
Fantastic.
Yeah.
Somebody had also asked about the nature of the standard. So we are a wholly owned subsidiary of the largest Japanese life insurer in Japan, Meiji Yasuda. And I think, from my perspective, that's a whole nother layer of financial stability. Now, obviously, our financials and capital and surplus and risk-based capital are based here. But the nice thing about being owned by a Japanese life insurer, one, the industries are aligned. Number one. Number two, Japanese business and Japanese insurers take a very long view on providing protection, on managing their businesses. There are, don't want to call out names and things like that. We're all friends, but there are private equity companies. There are other kinds of companies that I think have a shorter view on how they're managing their business in particular and how ultimately they engage in policyholders. The motto of Meiji Yasuda is peace of mind forever. Boy, what a great theme. And how consistent with the value proposition that we're trying to deliver and that you're trying to deliver, Amy, with Annuities Genius, providing that peace of mind on the front end in terms of establishing best interest, evaluating different carriers, different products. And then once that recommendation and purchase decision is made, having the confidence of having peace of mind on the delivery of performance, protection, and guarantees. Can't think of a better theme that encompasses the purpose of our industry.
Well, thank you very much. We are very happy to have your carrier on the platform as well. We are all about that trust and transparency between the carriers, between the agents, and between the prospects especially. So we want to ensure that those consumers out there are being protected, getting the best products for them without question, and that we're helping our agents help America retire. And I just really appreciate the integrity of what you guys are doing over at the standard and the focus that you have, of course, on that consumer centric and ensuring that the products are the best that they can be. I think it's a really wonderful mission that you guys have and that you're constantly upholding. We appreciate your partnership and being able to display those wonderful products on the platform. And of course, thank you so much for coming and doing this presentation for us and for our users today. Could not be more grateful to you for being here today.
Thank you so much. It's awesome. And good luck to you.
Thank you very much. And thank you for everybody who came and jumped into our wonderful webinar today. Appreciate our users, of course. We couldn't do it without you guys. So thank you all. And one more time, thank you, Paul, again.
Thank you, Amy, and thank you, Annuities Genius.
All righty. Have a wonderful day, everyone. Bye.